Okay, welcome to the Anderson Report. It is Wednesday, July 22nd, and we had a very positive day today in the financial markets, and we're going to do a recap of that. We will talk for a couple minutes about earnings from a couple of market leaders after the close, Microsoft and Tesla, and a couple of key news items on the day, some of which had an impact in the market, some of which did not. Um, but let's start with how the market finished at the end of the day. We had a pretty strong rally in the last 2 hours of the day that really, uh, after stocks had been pretty much unchanged, a little bit up, a little bit down for the market averages most of the day. We came off an area where we were kind of near drifting near our lows of the day. Stocks rallied pretty good during the last 90 minutes, a little bit longer than that. And it actually took the Dow Jones Industrial Average to its first close above 27,000 since June 8th. The Dow was up 0.6%. It is up 4.6% for the month with about 1 week to go. And it has now cut its decline year to date to 5.5%. So the Dow is down 5.5% year to date. It has cut its year to date decline almost in half during the month of July. So we closed at 27,005, just by the smallest possible margin above 27,000. So the level to watch, if we get a couple of strong up days, 27,572. That was the closing high for the Dow in early June. In fact, on June 8th, that was the Monday after the May unemployment report, when we had that the very surprisingly strong May jobs report. The market rallied sharply on Friday. A lot of shorts got shaken out of the market, and then it rallied even more sharply on Monday. That was the high for the Dow since the big sell-off started in late February, 27,572. So we're still about 600 points away from that. The S&P 500, on the other hand, is holding its breakout above its February high. It's the S&P closed up about the same amount as the Dow, 0.6%. It's at 3276. The breakout above the June highs was 3233. The S&P is up 5.7% month to date, and it's holding the move it made a few days ago into positive territory. It for the year, it's up almost 1.5% year to date. Now, um, the Nasdaq had an okay day, trailing the Dow and the S&P a little bit. It gained a little over 0.2%, but it closed above 10,700. And I still feel that there are people taking some very well-deserved profits in the big 5 to 10 high-powered, mega growth technology stocks that are driving what we call the internet traffic trade. But look, the Nasdaq did gain a little bit today. It was down 0.8% yesterday. It was up 0.2% today. A couple of the metrics I gave on the Nasdaq either yesterday or the day before were wrong. The Nasdaq right now is up 19.3% year to date. That includes what it was up in the first half of the year and what it's up in July. It's up 6.5% in the month of July, had a very, very, very strong rally to begin the month, and it's struggling with this 10,800 level. That's about 100 points. If you really want to get specific, it was 10,820 was the intraday high on July 13th. It's struggling with that. Uh, and it's about 110, 115 points away from that. But the NASDAQ is up just less than 20% year to date. I do think that some big dough investors are going to sell on strength in any of these big high cap supercharged NASDAQ stocks over the next, you know, if we see further rallies in the NASDAQ, it's up almost 20% year to date. It just can't duplicate the gains it made in the first quarter, um, in the first half, in the second half of the year. And keep in mind, those are year to date numbers for the NASDAQ. That's not off the March lows. That is year to date from December 31st, 2019 to right now. Okay, now the Russell 2000 had a respectable day, very small advance on the day, 0.2%. It closed at 1490, but it's holding this move off its 200-day moving average. There are times when moving averages mean a lot more than others. For the Russell right now, this is one of them. It shot off that. It got above it about 6 or 7 days ago and held right on it for about 4 days. It was almost eerie. The Russell was just the smallest possible amount above the 200-day moving average. And then it had a significant move yesterday, up 1.3%, holding on to some of that now. The Russell is, just to give you an idea of how much it underperformed and how much it got hit really hard during the sell-off in March and April, really in late February through early April. The Russell is still down 10.8% year to date, although it's having a decent month and quarter. It's up 3.4% in July. We'll see if maybe this move into the small caps that we started to see significantly last week can be a good second half story for the Russell and for the small cap universe. Now, if the Russell were to continue to rally, the level to watch is 1536. The Russell closed at 1490. 1536 was the closing high for the Russell on June 8th, the same day that the Dow made its closing high. That is still higher than where it is right now, right after the May employment report. So the breadth of the market was decent. Advancing issues beat decliners by a little bit less than 3-2. I think we'll take that for a market that was basically unchanged all day long. The only thing I would throw out there is that advanced declines were just mildly negative in the NASDAQ composite overall. They had acted very well, even when the NASDAQ went down 0.8% the other day. Advanced declines in the NASDAQ were positive by a good amount. They were off by 250 issues. That's out of like 3,200 stocks. So you had about 1,500 advancers, about 750 decliners. You know what? We'll take it. We're coming into a very big earnings stretch for the big flagship mega cap growth names in NASDAQ. A couple of them we'll talk about in a minute or two. So, although the averages were very unchanged till the end of the day, we had a very nice rally the last 90 minutes to 2 hours. One thing was that oil, which had a very strong move yesterday, got up and touched 42 intraday, closed at about 41.80. Oil was down about 40 to 50 cents right out of the chute this morning. Spent most of the day negative, maybe 30 to 40 cents. Rallied at the end of the day, closed only off maybe 5 or 6 cents. So the energy sector, which was up 6.5% yesterday, was down 1.3% today. You know what? We'll take it. The energy sector is still up 5% over the last 2 days. As I mentioned yesterday, some positive news in this sector. Chevron buying Noble Energy, but also on the commodity side, oil holding above 41, traded in the low 41s early today, went out at about 41.70, very close to unchanged after a big move yesterday. It'll be very interesting to see what we get out of oil going forward. In fact, we had the oil inventory numbers um, this morning, and we had about a 5 million barrel build in oil inventories versus a the prior week. So when oil inventories build, that means a lot more supply, and sometimes that causes the price of oil to go down a little bit that day. Oil was already off quite a bit. I think people were looking for a build in inventories. The prior week, we had a decline in inventories, oil inventories, of 7.5 million barrels. That's what really helped oil hold $40 at the end, which we were looking at as a little bit of a demarcation thresh mark for the price of oil. But that decline in inventories that we had last week of 7.5 million barrels, and it's a weekly number, was what helped oil hold $41 through the end of the week. So people were looking for some of that to be reversed. Some of it was. We had a build of 5 million barrels. The price of the commodity shrugged it off and acted much better the second half of the day than the first half of the day. That number comes out at 10:30 in the morning. Oil was already down. It maybe got a little bit jittery right after the number, but then it acted okay. So um, a couple of other sectors to mention: healthcare sector up 0.8%. More positive news on the virus. A little bit of a positive story on uh, Pfizer and the other big pharmaceutical companies. BioNTech, symbols BNTX. They are getting $1.9 billion to produce 100 million doses of the vaccine that they are working on. I'm not sure if they each have a vaccine or if it's a joint project between them, but uh, but they are actively right now producing this vaccine, even though it's not been approved yet, and we don't even know that it works yet. Uh, there has not been a stage 3 trial, and there are other companies that are doing the same. Now, this is what's called um, manufacturing at risk, because the reason that they want to do this is because if the vaccine is approved, they want to have it stockpiled already so that it can, in a very short period of time, be distributed to pharmacies, doctors' offices, any type of a medical office that will then be giving the vaccine. They don't want to say, okay, we've been approved. Now it's going to take us 3 months to do the production of the vaccine. So if they don't get approved, yeah, they're going to spend a lot of money to make the vaccine, and then they're going to take a hit for it. So they've made some type of an agreement with the government, and the government is giving them $1.9 billion to produce 100 million doses of the vaccine up front before it's even approved. Obviously, if it's not approved, it won't be used. Now, um, there's also vaccines being worked on by AstraZeneca and by Johnson and Johnson. They have stated that they will sell their vaccine at cost to either insurance companies, people who use it under insurance plan, people who use it and pay for it out of pocket, and or the government, if the government's going to buy it and distribute it. And there was some little bit of a fight going on in Congress about some a group of 6 to 8 Democratic senators pushing back on this $1.9 billion the government is paying to Pfizer and BioNTech to produce the vaccine, saying it's way too much money. We shouldn't be spending the money on that. Well, it's, that's politics. So we also had a mortgage applications number very early in the morning. Mortgage applications up 19% year over year, helping fuel the rally in the housing stocks. We had existing home sales numbers for June come out. They were up 20% from May. May was a very sharp decline. Just as a point of clarification, existing home sales means transactions that went to contract and have now closed. So a existing home sales data is on final sales. Big jump off of May's number, which was a big decline because we were pretty much shut down in April and May, and an annual rate of about 4.7 million units. The housing stocks did act pretty well. The housing stocks are benefiting from very tight supply, very, very low mortgage rates, below 3%, and for a 30-year, and also a tremendous interest in a lot of city dwellers potentially moving out of the city just to get more space and maybe a little bit less chaos. Okay, so we touched on the sectors briefly. We had healthcare did okay. Industrials up 0.8%. They were one of the best acting sectors last week. Utilities up 1.5%. There was some crazy action in a couple of utility stocks. Real estate up 1.2%. Again, that's probably real estate investment trusts, meaning big office buildings, shopping centers. It's probably coming off a very oversold state for real estate. Infotech, that's your NASDAQ internet trade. Consumer staples up 0.7%. Not a wildly volatile day for the sectors. And again, for most of the day, the markets were pretty unchanged until the last 90 minutes when they caught a pretty good rally. Now, there was one other pretty significant headline today coming in right out of the chute early this morning. The news was that the government had requested the Chinese consulate, or ordered really the Chinese consulate in Houston, which is a very large building, to shut down by Friday. So then you had this little bit of a circus event where there's a big courtyard there, and there was a lot of alleged burning of documents and so forth. Clearly, the government is alleging that the Chinese have been using that consulate to basically engage in property theft. And I'm sure that governments all over the globe use their consulates for some type of espionage or intelligence purposes. But the Chinese, I think the feeling is that the Chinese have just gone way overboard on this. And they've got connections with people at universities, at research operations, and they are just so aggressively after intellectual property theft any way they can get it. and potentially also trying to steal the hack into some of the medical facilities and some of the big medical research labs that are working on this virus. I'm sure the government has very hard evidence of this. There, and I'm sure that the closing of this Chinese consulate in Houston is very closely tied to two Chinese nationals that were arrested earlier in the week for allegedly some internet hacking of big government and or industrial intelligence. Um, so the interesting thing I thought for the market in terms of that news on the Chinese consulate being told to close was that the natural reaction is, oh boy, now we're gonna, what we've already got very tense relationships with China. Trump has already said he has no interest in talking to Chairman Xi right now. You can tell it's just bubbling behind the scenes. A lot of people are talking Cold War. Some people are saying, yeah, but it's really very different from the Cold War. I won't get into the semantics of it, but there's a lot of tension behind the scenes between the administration and the Chinese Communist Party in Beijing right now. And you would think that the stocks that are very trade sensitive, especially to business in China, would potentially get hit on this. I didn't look at them at the end of the day, but midday, when the market was really not doing that well, Cat, Tractor, Triple M, Boeing, Intel, all heavily exposed to business with China, were all up at least 1%. And I think part of the reason for that might be that I think investors, and even big investors, we went through 2 years of tariff tremors in the market, occasionally tariff wars. It started right the day after Davos, I think in 2018, when Trump made it very, very obvious that we were going to ditch NAFTA, go with something new there, and that we were going to negotiate a new trade deal with China, et cetera, et cetera. We put tariffs on. There are still tariffs on China. And he used tariffs very, very aggressively as a lever to renegotiate trade deals with China, which had been done probably when China was an emerging market and they got emerging market favorite status on a lot of those deals. They're not really an emerging market anymore. They're the second largest economy in the world. And they've been using this emerging market label just egregiously to their advantage with people like the World Trade Organization and other global groups that just have refused to call them out on it. So I thought that the big global trade stocks, particularly with China, might get hit. They really didn't. And I think that just big investors, even big institutional investors, not just retail, have been immunized and inoculated against these constant tremors with China, which for 2 years all revolved around trade and now revolve around probably bigger issues. A lot of it's percolating behind the scenes. And I think that Secretary of State Pompeo is going to give a very big speech. It's either tomorrow or Friday at the Reagan Library, and it's basically going to lay out what the framework is going to be for U.S. China relations for the next decade and beyond. It's going to get a tremendous amount of attention from all foreign policy experts, foreign policy advisors, foreign policy critics. We'll see how much attention the media gives it. Pompeo's obviously a brilliant guy. He has known a lot about China for a long time. and I don't expect him to tread lightly. So we'll see if the big stocks with the big China exposure can hold up through the end of the week, particularly after that speech. Um, a lot more banter on the potential stimulus 4.0. I take it all so far with kind of with a grain of salt. I think that there's different comments from a lot of different people. Some people say the Republicans are very nervous that if they don't do a deal very, very shortly, if it drags on, it'll hurt their chances to uh, keep the Senate in the November elections. Pelosi is going to push really, really hard for a 6-month extension of the $600 federal kicker on weekly unemployment. Um, there's clearly going to be a compromise here, and some type of a deal will get done. But until we really get the details of it, I think a lot of the media reports that we're getting are going to sway back and forth. And until there's a little bit more concrete stuff, I don't think it makes a tremendous amount of sense to spend a lot of time on it because it's a very, very fluid situation and it undoubtedly will change a number of times between now and when the deal is done. Okay, so let's talk about big earnings after the close today. I think maybe the market was having a very low volatility day for most of the day in advance of this, but we had both Microsoft and Tesla report after the close. Microsoft, their revenue easily beat expectations of 36. They had 38 billion in revenue versus 36.5 billion forecasted. Their earnings per share easily beat the estimates. They reported a profit of $1.46. The estimates consensus average was $1.34. The stock reaction was kind of a different thing. And we get this sometimes where the stock has had a really big run. It's been a great stock this year. It's way up off the March lows. I don't know how much, but well more than 50%. And it's way up year to date. Clearly a huge beneficiary of what we call the internet traffic trade. I don't know if they had their conference call or not before the last time I looked at what the stock was doing. It was down about 2.5%. A little bit of a sell in the news reaction. That happens very frequently. You get people, I'm sure there were some very exuberant expectations. They did say that their LinkedIn division, they bought LinkedIn quite a while ago, had underperformed, mainly because of advertising and the job promotion part of LinkedIn was way off due to the coronavirus. Clearly, very few companies were hiring. But that's not a major part of their business. It's just if somebody wanted to see a negative headline on Microsoft, that was probably it. Although LinkedIn had reported the other day, yesterday, in fact, it was a headline story in the Wall Street Journal today that they were going to lay off 6% of their workforce. So, and even a lot of people that really dig into Microsoft, they want to look at their cloud business. They want to know if their cloud business is maybe starting to compete a little bit more significantly with Amazon. I don't have the numbers for it in front of me, but I did catch a few comments from people that are usually pretty good on the stock that their cloud numbers were very strong. So this could be a knee-jerk reaction with Microsoft. We'll see how it shakes out over the next couple of days. Now, Tesla, highly anticipated earnings report, because the deal with Tesla was, first of all, and I'm not an accountant, but I'll do this the best I can. If Tesla, part of the anticipation coming into Tesla's earnings for Q2 was that there's tremendous anticipation over Tesla going into the S&P 500. Well, because they are the 12th, they're, look, the numbers change as the stock price changes day to day and week to week, but they're between the 12th and 15th largest market cap publicly traded company. So that would mean of the companies that are listed on either the New York Stock Exchange or NASDAQ, they rank between 12 and 15 at, in terms of the largest market cap company, stock price times number of shares outstanding. So clearly, they are a huge company in terms of market cap. They're twice the size of Toyota Motor in terms of their market cap. Their stock is valued on at a multiple of earnings 5 to 10 years from now. And there's a large short position in the stock. You could say that some people would say it's priced for perfection. I would just say that people that are in it for the long haul because they think it's a transformational technology that's going to change the automobile market significantly over the next 10 years and beyond. Okay, so if they were to report positive, profitable earnings today on an approved GAAP basis, which is generally accepted accounting principles, that would qualify them to potentially go into the S&P 500. You need to have 4 consecutive quarters of profitability for the S&P to then make the decision to include you in the S&P 500. Now, I believe that they did that, although the headlines I saw, look, their revenues were a beat, $6 billion in revenues versus 5.35 billion. So they beat by maybe a little over. Their revenues were 10% higher than estimates. Now, their earnings estimates were all over the place when people thinking they were going to make $5 to lose $5. So their estimates are, you rarely have a situation like that. I'm also told that their earnings are always complicated, somewhat controversial. There have been some very highly regarded people that have pushed back on them on occasion, saying that their accounting is just way too aggressive. I can't get into that. That's a little bit beyond my expertise. Their earnings per share on an adjusted basis, they made $2.18. I just don't know what's included in that adjustment number. I think that people are going to say, and the stock was up a little bit after they reported. The consensus, by the way, was for them to make 3 cents. I'm kind of throwing the consensus out because there were estimates that they were going to make $8. There were estimates they were going to lose $5. They made $2.18. So they had a fourth straight quarter of profitability. But that's an adjusted number. And I don't know what it's adjusted from. So you got to wait and see if S&P makes a statement on it or what the people that are really good at Tesla say, probably after their conference call, either later tonight or tomorrow, to see. And then let's watch for the next week and see if S&P says we're adding Tesla to the S&P 500. Look, they could say that they're adding it at the end of the month, which would be, let's see, today's the 22nd, 23rd, 24th, which would be next Friday. It's a possibility. I'm not predicting it. I'm not saying it's likely, but I think the S&P likes to, if they could do it right at the end of the month, maybe they'd like to do that. It will be a big, if they get added to the S&P 500, what that means is every index fund out there will have to buy Tesla and have to own as much of it in their index fund. Will have to make it the 12th or to 15th largest holding that they have in their index fund. Now, if they already own it in a growth fund or in some other type of an aggressive fund in their mutual fund complex, they might be able to um, journal some of it over. There are different rules on that. Uh, but it would obviously cause a tremendous amount of buying in Tesla tied to whenever the date is that it would go into the S&P, and I'm not saying that's going to happen yet, but it would also create a very, very high volume day for the market, because in conjunction with that, all these funds would then have to adjust all the 500 stocks that they have, and the stocks that are then weighted below Tesla, most likely numbers 16 all the way through 500, they would have to own a little bit less of those, because the S&P 500 is a market capitalization weighted index, and they're going to want to have their funds mirror the S&P 500. And if you want to Google it and look at a table of S&P 500 from stock number 1 to stock number 500, and then imagine Tesla showing up as stock number 13 or 14 and every other company moving down a notch, basically it'll mean that 485 stocks in the S&P 500 will be a net sale on that day, and Tesla will be this monstrous net add. I'm not saying it's going to happen. I'm not saying that even if this was a clean earnings report, that S&P is going to put it in the index. It's up to them. They might, you know, say, let's give it another quarter. And frankly, I don't even know if Elon Musk really cares. It would be a big event for big media event for him. I'm sure a million people would talk about it that day. The financial media would talk about it for all day long, whenever that day would be. So, look, I really appreciate everybody watching the program. I certainly appreciate the support from people that are in the chat and that like the broadcast. I appreciate the comments that I get in the chat, and I get some on Twitter from people either directly or via DM. Um, if you have not yet subscribed to the channel, please subscribe to the Anderson Report on YouTube. You can also watch it on Periscope if you prefer Periscope, or if you're a little bit more mobile, it is TJ Anderson 12. My Twitter handle is TJ Anderson1. I am Tim the Source Anderson, and I enjoy doing this show. I try to keep it to about 45 minutes. I think beyond that, it's just, you know, I want to make it so that if people catch it after the fact, because there's no time during the day that's great for everyone. If people catch it after the fact and they see, oh, 42 minutes, yeah, you know what? I can watch that for a little bit and see if it's worth watching the whole thing of. I just feel if it's more than an hour, people are like, yeah, I don't even want to start more than an hour. I don't know if I have that extra time right now. So, look, we'll get the employment numbers. We'll get the weekly employment numbers tomorrow. I I really want to see that number get down below that weekly first time ads below 1.2. I want to see it get down closer to a million. I don't know if it's going to happen tomorrow. There's a there's obviously headwinds from businesses in big population areas being a little bit slower to open back up than we might have anticipated. The $600 extra kicker from the feds is still out there in the unemployment uh, uh, payment system. That's for disincentive for some people to go back to work. The market's had a very, a good week. It's had a great month. If people are looking for a reason to sell tomorrow, it might be a little bit of a disappointment from the weekly jobless claims. I'm sure the consensus is right around somewhere between 1.25 and 1.3. And that continuing claims number right at 17 million, down from 18 million the week before. We'd really like to see that one week all of a sudden take a big hit down to like, 15 million, eventually get much lower than that. Um, John, I see your question there from earlier. Where is Mnuchin and all this treasury needs to step up in the fight against China? I think Mnuchin's very much on board with that. He chairs this group called CFIUS that approves potentially all mergers and acquisitions. He's They're very sensitive to Chinese ownership of any businesses. In fact, I did see there was a report very early in the day. I can't remember what group it was. It might have been a Blackstone-led private equity group that is interested in buying this crazy little social media app called TikTok. It's owned by a Chinese entity right now. I think they were actually going to CFIUS at the Treasury Department to see if they would be approved to buy that, because I think they don't want to go through the bidding process unless they know that they're going to be approved for that acquisition that I don't even know if they've decided they want to do yet. So, look, I really feel that the administration is on board with Trump over the pushing back on China. I think you're going to see more of it. I think you're going to hear Pompeo talk up very aggressively about it when he speaks at the Reagan Library later in the week. I honestly don't remember if it's tomorrow or Friday. I think you're going to hear a lot more about it from a lot of people in the administration. I think you're going to hear about it from the campaign. And I think that they're going to make China a major issue in the campaign over the next, 14 weeks. I think they're going to draw a very sharp contrast between their approach to China and what they will claim Biden's approach would be. And they are just you're going to hear it more and more and more and more. And I think they feel that even though the economy is going to be a little bit slow to come back online fully, I think they're very confident that the China issue plays to their strength. Okay, it's a little after 7:40. I appreciate everybody watching the show. Subscribe to the channel if you haven't done so. Have a great rest of the week. I will very likely do a show tomorrow on Thursday. Probably not on Friday unless there's big news on Friday. And there won't really be big earnings. There might be something Friday morning. I got to look. But we'll definitely watch how Tesla and Microsoft react tomorrow to their earnings reports and whether or not energy and oil can hold this move between 41.5 and 42 on the commodity. Have a great night, everyone. Thanks for watching. We'll talk to you soon.